Again, good morning everyone. Now I would like to introduce Georgy Mathew sir, is practicing Chartered Accountant and partner of Verma & Verma. Verma & Verma is an 82-year-old firm of Chartered Accountants founded by two princes of royal family of Kochi in the year 1935. Today Verma & Verma has 28 partners across 9 offices in India and employs around 450 people. The Bangalore office of the firm is near Banaswadi and employs around 140 people. Sir joined Verma & Verma when he was 18 years old and did his actorship training at the head office of the firm at Kochi. Thereafter, Sir worked at Kochi and Pune offices of the firm as a chartered accountant. Sir moved to the Bangalore in 2003 and became a partner of the firm. Sir is a certified information system auditor from the Information System Audit and Control Association USA and has completed his ISO 27000 in 2013. Led auditor training course and is also certified Privacy and European Union General Data Protection Regulation practitioner. Sir is an alumnus of Kendriya Vidyalayas. Sir is an active scout during his school days and was awarded the Raja Puruskar in the year 1992. Sir has served on various committees of the Bangalore Chamber of Industry and Commerce. Verma & Verma has been central statutory auditors of nationalized and private banks in India and Sir has been part of these audits at the branches and at head office. Currently Verma & Verma are one of the central statutory auditors of the State Bank of India. Let's give him a warm welcome to CA Georgy Mathew sir.
I request CA Srinivas sir to welcome George sir onto the stage and also present sir with a bouquet. Thank you, sir. Prior to starting the session, we would like to just take 3 minutes to distribute the booklets and so that it will ease you while you go through the session. While the booklets are being distributed, I would like to bring to your attention about Sikasa Speakers Forum. Sikasa Speakers Forum is a forum which will help you to build your public communication skills. It happens every Sunday from 8 AM to 10 AM at Racecourse Road. So all of you are invited. It's a free forum. Apart from that, we have various Sikasa activities. On 29th, we have a How to Face CA exam seminar coming up. And on 13th, we have a seminar on mind and to develop mind abilities. So all of you are welcome. Please visit our website for more details on events. Okay, I would like sir to start on with the session. Over to you. Thank you.
Good afternoon, everybody. There are around 11 seats on this side, so if there are people from the corner there who want to move here, please feel free to move. And one promise is that I will not ask questions. Okay? So, the other reason why I said, I started with something light was I find a lot of serious faces in this room. Right? All of you are very tense about what you are going to do. Yeah? And as Mr. Srinivas is mentioning that you have that look of you are already qualified. Are there any qualified people in the audience? Okay. Are there people who've done branch audits before in the audience? I told you I will not ask questions. So please feel free to raise your hands. I am not going to ask questions. Okay, just want to know what is your experience in doing bank branch audits. What do you feel? Do you find that you have sufficient time? No. Branch audits are normally, done in a lot of constraint of time. So you need to be therefore much more prepared when you go start your branch audit. See, as they are distributing the pamphlets, please, give me your attention. The whole thing is, the more you are prepared, the better you are at executing the branch audit. Alright? And to do that, an audit is an audit is an audit. It doesn't matter, it doesn't differ from client A to client B. All you need to know is, what is the statute under which you are doing the audit? What is the special circumstances or regulations that apply to this client? What are your deliverables as far as an audit is concerned? Are there people in the audience who've done company audits? Can I see hands, please? Alright. So if you've done company audits, a bank audit is nothing but a company branch audit. Right? It's just that the statute under which you're doing this audit is different. So you have to be aware of what are the changes. The way you report is different because of the hierarchy of the branch. You have multiple branches which roll up to a zone, which roll up to a region, which roll up to a central balance sheet at the branch head office level. And therefore, many of the things that you do are based on formats which have already been prescribed. You cannot change anything in those formats. Even if a format is not applicable to the branch, you are expected to write not applicable and submit that blank format back, because otherwise at the level of consolidating, you can imagine the difficulty that people who consolidate have. If one paper is missing from one branch, you don't know whether it applies, it doesn't apply, it got missed out in transit. Nothing of that is known to people who consolidate. Therefore, whatever documents you have, the pack that the branch gives you, please ensure that every single paper is submitted back. If it is not applicable, mark them not applicable, still sign them and send them back to the branch, so that those can happen. Right? Now that all of you have the materials, we will start. My presentation is more on a workshop model, so you don't need to write notes. The slides are itself made in a format that you can use this when you are doing the branch audit. Carry it with you, use it when you are preparing the LFAR. Alright? At the end of the presentation, the PPT slides, there are 5 pages of normal discrepancies that you see when you do an advanced verification. And that has been listed for you. It is primarily to equip yourself. Many of you have not done bank audits before, so read these instances of deficiencies that have been listed there and have that at the back of your mind when you do the audit. Alright, and that will help you in doing the audit at the branch. Like I told you, the biggest concern when you do a branch audit is the pressure of time. You don't have enough time to do it, and therefore the better prepared you are able to execute the audit that much faster. Right? I am the only one who stands between you and lunch, so I will try to go quickly. In case you want me to stop or repeat something again, please feel free to tell me that. Alright? The source of the presentation is the guidance note, which was published in March of this year. If you don't have it, please download it. Alright? It's an exhaustive manual of what you need to do in a branch audit. So please download this, and if you have WhatsApp or whatever, if you have a smartphone, try and keep it on the phone also, so that you can go through these when you are at the audit. Pages 601 to 645 cover the LFAR, and that is what I have used to prepare this presentation. See, the LFAR is a questionnaire which has been prescribed by the Reserve Bank of India, and it is primarily to highlight internal control weaknesses. It asks for opinion on what is the system that the bank has for monitoring controls, for credit appraisal and other procedures that the bank follows. So if you have done a private limited company audit, this is similar to something like a management letter. Okay, it is not an audit report which goes to the members of the, like when you do a company's audit, the audit report goes to whom? The shareholders of the company, right? You address the audit report to the shareholders of a company. When you do a branch audit of a bank, you address your main audit report to the central statutory auditors, because he then uses that to report to the members of the bank. Whereas when you do a branch audit, you are reporting to the central statutory auditor, and the management letter is in the format of the LFAR. Alright? This has been also prescribed to overcome the limitations in the format of the statutory audit report, where you are only allowed, see, like at a branch audit level, you can't write too many things in your statutory audit. So whatever you want to write about how the branch is operating, how it monitors its business, what are the controls in existence, all of that you can put into your LFAR. Okay, so look at it at just that much. It is a document which has a form like your form 3CD. There is a format prescribed to it. There are certain questions that are there, but you are free to write what you want. There is one part which is other matters. If there is anything that doesn't get covered in the area where there are specific questions, you can put it all under other matters. So it is something like a management letter to the bank. Again, the statutory audit report and the LFAR are two independent and unrelated reports. Please understand that again. So if you write something in the LFAR, it does not amount to a qualification in the statutory auditor's report, and vice versa. So if you write something in the statutory auditor's report, that does not amount to be a qualification or an adverse remark in the LFAR. So these are two totally unrelated reports because of to whom you are reporting this. LFAR is for the limited use of the management and for regulators, for RBI and for internal inspections. We have covered this. Any adverse comment in the LFAR may not necessarily lead to a qualification in the statutory auditor report, but if there are things that affect the true and fair view, please mention that in the statutory audit main report also. We have discussed this, that it gets consolidated by the statutory central auditor into the LFAR of the branch as a whole. Discuss the contents of the report with the branch head. Always, whenever you do these audits, discuss the contents with the branch head so that they are sure that there are no factual errors in what we are reporting. The extent of verification, the manner of sampling, so it can be as descriptive as you want. There is no format of how the answers have to be framed. So please be clear so that you evidence your work in the way you write the LFAR. How you have sampled, what you have done, what are your observations, and what is your opinion on that. And when we are doing a branch audit, we are not expected to verify the systems, the computer systems of the branch. The previous speaker had also mentioned that we rely on those systems. So if there are any changes which have been made to the systems which you are aware of, please make sure that you bring it out in the LFAR. Again, the questions in LFAR are only indicative. If there is anything further that you want to add, please add it in the others section. And adverse areas in KYC compliance, lockers, security arrangements. I mean, nobody asks for whether there is a physical security in the branch, but if you think that there is something which is a risk to the branch, please feel free to write it down. The LFAR questionnaire should be answered in clear, concise and a meaningful manner. But please don't just say yes, no, because your yes and my yes may differ, right? You ask people some questions and they say, yes, yes. All of those are very, very subjective. Your yes and my yes may not mean the same thing, right? So please describe what you mean, and we will see a few illustrations of how answers are framed to questions in the LFAR. We discussed planning in the previous session. But I would say refer to all audit reports which have been done prior to commencement of your audit. Okay, LFAR is something that you have to be prepared for. It's like your CARO report when you do a private limited company. See, when you are verifying fixed assets, please verify whether there are records. Don't come back again for, when you are preparing your Caro report to see whether there are records after the audit is done. So your LFAR progress and your statutory audit progress has to be hand in hand. So when you are doing advances, please make sure you note down the lacunas in monitoring, in disbursement, so that you can prepare the LFAR without too much of a problem. Try and understand your branch. How many of you know which bank or which branch you are going to audit this year? Right? We are already on 21st and nobody knows which bank, which branch, what you are going to audit, right? So again, imagine the pressure of time that is going to come on you when you are going to start doing the audit, right? So you have very limited, we don't know whether it is going to be an SBI, it can be a Union Bank, it can be any of the banks, right? So you have so little time. So the moment you get appointed, you get an appointment letter, then I think one of the clarifications to the earlier presentation was the engagement letter is something that you issue to the branch. It is not, it doesn't come to you, okay? Engagement letter is what you issue to the branch and get them to sign on it. So that is the only correction on the previous slide that session that I wanted to make, that is, you get an appointment letter and you issue an engagement letter to the branch and get them to sign that after the NOC from the previous auditor has been received. Okay. So in planning the audit, try and understand the profile of the bank. Some banks may be purely retail banks, retail branches. Those are branches which only service individual customers or normal needs. There may be branches which are into corporate lending. There may be branches which are specialized, larger branches which do only advances above a certain amount. So first understand the profile of your branch and also try and get a list of your top 20 accounts or something like that of the branch. This again gives you some time and some idea of what to expect when you go there. Right? What is the business of a bank? The bank takes money from some people, invests it into other products that earn income, gives it out to certain other people, gets income from that. Right? In a nutshell, that is the business of a bank. So you need to understand whether you are more client-facing, more retail-facing branches, or are you more corporate-facing branches, and that will again give you an idea of what to be prepared for when you go for doing your branch audit. The LFAR, so when you are planning to do the branch, try and get all the previous reports, this last year's statutory audit report, tax audit report, LFAR, read them before you reach the branch, try and see whether they can send you scanned copies or whatever, or even pick up a copy and read through those. Internal inspection reports, RBI inspection reports, if there are any of these also, because that again focuses on lot of issues that are there in the branch, and you don't need to actually wait for the branch to close its operations to get all this information, because these are all records which are already in existence. Concurrent audit reports. Try and get all these information, read them up before you reach the branch. Get a profile of the borrowers, the top borrowers of the bank, and then you have all the ammunition. Read the guidance note, refer to this list of deficiencies that we've given, and you are in a position to go do the audit. All said and done, the focus of a bank audit when you reach the branch is only on advances. You have time because you have to refer to a lot of documents. So most of the time that the seniors and people will be spending would be on loans, the advances that the banks give out. Right? So unless you are prepared for the kind of advances, like if it is a motor loan, what is the documentation to expect? If it is a car loan, if it is a housing loan, what to expect? If it is a CC loan or a term loan, what to expect? You have to be aware of this when you go there, because the time that you have is very, very limited. Then each branch, like the earlier speaker had said, is regulated. There are a lot of guidelines which the head office issues. So the first set of that would be the closing guidelines which are issued to the branch. Get a copy of all of those documents, and that will also help you plan your final audit. What are the limits that have been delegated to the branch? What are the instructions given by controlling authorities? Later on in the slide, I will be referring to controlling authorities as CA in many of the slides. The questions that you are asked expect you to give an opinion. Some of them expect specific replies based on what you have verified. Some of the questions require a study of the system and how it is working. and some require you to give your opinion, your suggestion for improvements if any. So do not merely list your observations without drawing any conclusions on it. Yeah. The guidance note is also has a box which is there on page 604, 605, 606, which again gives you an idea of what is the information to be complied. Many of us, when we go for the first branch audit, again for the paucity of time and all that, not much of instructions come from our seniors or from the partners, right? We have to go and we have to start doing it on our own. So when we go there, this is a good place to start, because there will be a list of documents, what all you can ask. And again, please use it in relation to the volume of business or the kind of business that the branch does. If you go to a retail branch and ask him for, give me all the list of term loans that you've issued, he may not even have it, right? So don't do that. Go through that list, pick what is relevant for your branch and ask for those information. And this is a fairly large list, it runs in 3 pages, so it covers most of the information that you should collect from the branch. Important among them, branch annual closing instructions, instructions issued by controlling authorities, previous year's SAR statutory audit report, LFAR and tax audit report, inspection reports, then organization structure and delegation in the branch. Certain branches, because of the type of bank, up to a certain amount can be approved by the branch manager. Above that, the regional manager, the zonal manager. So those delegations, depending on the size of the branch and the profile of its business, may be different. So please understand that before you do the audit. Finally, there are a lot of things on which you rely on the management. So also collect your management letter from the branch head once your audit is over. And if you are not able to get representations from the branch head, you may have to also consider whether you have to take a make a separate disclosure of that in your LFAR or in your statutory auditor's report, because that may sometimes be a limitation in scope. You go and ask him for how do you check your bank, the rate of interest. And he says no, I cannot show you, or he says no, I don't know. Those, then how are you going to verify whether the interest has been applied properly? So if there are such limitations in the work, also make sure that you point that out. The structure of the LFAR is broadly into 6 categories. You have assets that you cover, liabilities, profit and loss, general provisions, and then there are certain provisions which are for specialized branches. We are not covering that in this presentation, but the guidance note has how to answer those. And then there is an annexure to the LFAR. This annexure primarily talks about, gives details of the large advances which have been given by the branch. This has to be prepared by the branch. See, another thing about bank audit is that everything that has to be submitted to the consolidating authorities are all prepared by the branch. You have to concentrate on your auditor's report, you have to concentrate on your LFAR, you have to concentrate on your tax audit report. Every other report to be submitted, every other document to be submitted is already prepared for by the bank itself. See, the bank is an organization which prepares a balance sheet at the end of each and every day. They have this day-end process. The moment that is done, the balance sheet of that day is done. It's over. Right? When you had spoken about why you cannot pass entries and why it has to go through an MOC, right? This is how it is, because the day the branch closes, the time the day-end process is run, the financials of the bank are frozen. Nothing further can be done for a previous date. It can always be done only at a later date. If anything has to be given effect to as on 31st of March, it will be done only at the head office. Okay, and that is why you need this MOC, the Memorandum of Changes, to be issued. Okay, now we will go through specific questions. There are questions which are there on each area of the bank. We just look at the question, what is the evidence, how you can report. That's it. Okay, the entire LFAR is a questionnaire, so this is how it has been structured. My presentation has been made in that way. So the first question is, does the branch generally carry cash balances which vary significantly from the limits fixed by the controlling authorities of the bank? Whether excess balances have been reported to the controlling authorities. So first is you need to know what is the limit that has been fixed. Then try and export a list of day-end balances of cash, and Excel is the tool that you would use to filter for amounts which are above the limit. Pull that out prepare the annexure, you are done with that first question. Easy, right? Next question is, does the branch have adequate insurance? These are all older questions which are there. Nowadays, insurance is all taken by the head office. It would cover the branch, right? So nothing would have to be written, but in case it is taken for smaller banks, I don't know whether there are people who do cooperative banks and all that here, but if there are smaller banks, maybe there may be local insurance which is taken. If so, look at it, report factually. Is cash maintained under the effective custody of two people, two or more officials as per the instructions of the controlling authority? So understand what the instruction of the controlling authority is and whether you have evidence to verify that it has been maintained in the custody of two or more people. Why two or more people? It is primarily segregation of duties, it is internal control, right? So that is what you need to see, whether there is evidence of who has the key. Normally there is a key register. Whenever they change who has the key, it is written in that register. Okay, so look at it and ensure, report factually, cash is held in the joint custody of who with designation and second person with designation. Have the cash balances, including ATM balances which are at the branch, be checked at periodic intervals as per the procedures prescribed by controlling authorities. So again, instructions of controlling authorities, and then whether there is any other evidence to independently verify whether this has been done. So concurrent auditors, I think every month will have to verify. So look at these reports and then report whether it has been done daily, weekly, monthly, whatever. Bank, whether balance confirmation certificates have been obtained in respect of outstanding balances at the year end and whether the aforesaid balances have been reconciled. The nature and extent of differences to be reported. BRS, we have all done it in all the audits that we have done. Simple. Whether there is a confirmation in original. Always make sure that you get the confirmation in original. You should have that original thing in your file. Review the BRS statement. When you review a BRS statement, what do you normally do in any audit? Old outstanding items, right? Are there items which are more than 1 or 2 days for a bank? In a bank, there is old outstanding, more than 2 days is old outstanding, right? So if there is no balances, state the fact that the branch does not maintain balances. Some branches may not have balances with other banks. So if it doesn't have, please mention the fact. If confirmations have not been obtained, please mention the fact. If BRS has not been prepared properly, mention the fact. And if there are long outstanding items, there is a method, there is a format in which they have asked to report. Cash transactions which have remained unresponded, revenue items requiring to be written off, old outstanding balances remaining unexplained. See, please understand the premise of doing a bank audit is you are conservative and prudent when it comes to recognizing incomes and expenditure. What is prudence in expenditure and income recognition? Anything where you have a doubt whether it has to be debited to P&L, you debit. Anything which you have to credit, you have to wait for proof to ensure that you can take credit for it, right? So always in anything that you do in a bank, the focus is more on the debit aspect. Will it hit my P&L? Will it hit my P&L? When we come to sundry assets also, earlier they had covered one thing called sundry assets, right? Sundry assets is miscellaneous assets, loans and advances. I have given an advance to somebody, he has not supplied the material, he has not given me whatever, or it's an advance rent that has been deposited, should I expense it? The focus is on whether further debits have to come to P&L. Now, why could there be pressures on a bank to manage P&L? The performance of the branch manager may be evaluated based on the profit of the branch. So, certain things get parked, right? So, you have to, when you do an audit, ensure that there are no such items anywhere. When we are talking about bank, suppose there is something that should have been an expense for the bank lying in the BRS. An unexplained debit which is lying for a few months. The possibility is that it has to get debited to your P&L, right? So review this carefully, ask them for explanations, and by the time you do the audit, most of the items in the BRS should have anyway got credited or debited. Because in a banking system, any check also that you deposit in 2 days, it gets cleared, right? So there should not be anything more than 2 days, and before you close the audit, you can go back and ask them for the latest BRS. Even items which were in the BRS would have normally got cleared by that time. investments and money at call normally not handled by the branch. If there is anything, please examine, verify it and report. Advances. This is the big daddy of all bank audits. Okay. Advances. What is advances? Is it loans and advances? I mean, when we look at in a company balance sheet, when we say loans and advances, what is that? We say advances recoverable in cash or kind for. So it is some amount that you have given to somebody for which you may expect an asset or an expense or something like that to come in future. In a bank, an advance is a loan that the bank has given to a borrower, a customer, for which it has to recognize revenue and also recover the asset back at the end of the term. What is the life cycle of a loan in a bank? How does a bank give a loan? What would be the first process? Do you have anybody who has applied for a housing loan from your family or anything like that? Can you tell me what all they went through? Somebody has to prepare an application, right? Then somebody scrutinizes the application, based on which they sanction the loan. Certain things have to be done based on the sanction letter, creation of charge and things like that, and then the money gets disbursed. Thereafter, loans have to be serviced, interest has to be paid, and whenever the term of the loan is over, the loan has to be recovered. Simple. That's all that is there in a loan. That's the life cycle of a loan. And what you have to do in a bank audit is also verify all these steps. Right? There are whatever steps that we discussed, all of that has to be verified, and what is the process, whether they are following the guidelines that have been issued by the controlling authorities. Again, I told you, this may differ based on bank to bank, size of the bank. For a smaller bank, even smaller amounts are more material, so they will have detailed procedures. Larger banks, larger public sector banks may say, okay, up to 10 lakhs, up to 20 lakhs, they may have different sets of documentation that are available. So to answer the questions in the next set on advances, you have to, for large advances, please verify them 100%. For smaller advances, you can do a test check, and the larger advances are those which are 5% or more of the total advances of the branch or 2 crore rupees. Okay, so this is the threshold that has been defined. And again, these are the advances for which there is the annexure to the LFAR. So one of the things that you can do is, when you go to the branch itself, these annexures are ready. Read through those annexures. That annexure gives the entire history. What is the business of the borrower? How much is the limits that have been sanctioned? What is the balance outstanding as on 31st of March? What are the documents that have been submitted? How has the performance been? And then there is also a management. The manager of the branch also gives his opinion on what he feels about the branch, the particular account. So this gives you an idea of that account before even you start the audit. And this document has already been prepared for you by the branch management. So ask for these annexures and then ask for all the loan files. The loan files, normally, if you see, a bank documents everything that it does. Again, why does it do that? Because people in the bank keep changing. So the process of the bank is such that any letter, any correspondence with the borrower is always there. A copy is always maintained in the borrower-wise files. These files are maintained borrower-wise. So there will be letters to the borrower and letters from the borrower are all there in the file. Sanction letters will be there, and all correspondence which is there, including the monthly stock statements that he submits, all of that is there in this particular file. In addition to this, there is also a document file which they maintain for original documents which are submitted. Normally kept under locker. Please handle those documents with care. Earlier itself the speaker had mentioned, don't make markings on them, and if possible, if the branch is not a very safe or secure branch, please ask them to put it back in the locker every day when you are going back in the evening. Don't leave it in your audit room or things like that, because if a document is misplaced, a title deed of land or something is misplaced, it is very difficult to create that document again. So therefore, please be sure that those documents are handled with care, and tell the branch manager, I would suggest, tell whoever is coordinating the audit to please ensure that he puts the documents back in the locker. See, it could be a simple thing. What if there is a fire in the branch? Normally these lockers are all fireproof lockers. So the original documents don't get spoiled. The entire branch may go, but these documents don't go because these are securities for loans that have been given, right? Yeah, the first phase in advances is credit appraisal. So this is a process where you get an application from the borrower, review his credit worthiness, and then based on that you are prepared to lend to him, right? So the question that you need to answer is, in your opinion, has the branch generally complied with the procedures, instructions of controlling authorities regarding loan applications, preparation of proposals for grant renewal of advances? So an application is taken from the borrower when he is taking loan for the first time, and for working capital limits and all, there is an annual renewal process. So even at that time there is an application that is collected. So you need to do both. And enhancement of limits. So if you want to enhance your limit from say 10 crores, if you want 15 crores, also the whole application process is done. And documentation thereof. So your basic document is, what are the instructions that apply to the branch? Is there a head office instruction on how loans have to be processed? Look at that. And also refer to the RBI guidelines regarding to this. Now what are you looking for? When you look at this, you are trying to look whether the branch has applied, prudence in granting the loan. Whether there has been a due diligence process. Okay? So simple things like corporate borrowers, you have auditor's report which are submitted. Normally people only look at whether the borrower has a profit, whether he has a whether there is the debt service coverage ratio that has been calculated is proper or not. What if the auditor in his report has said the company has not provided for so many lakhs of expenditure or provisions or some loss that it has incurred, and their audit report is subject or is qualified because of that. If you have to add that debit to their or reduce it from the profit, maybe the borrower has a loss. Correct? So please ensure that for corporate borrowers you read the auditor's report also and recompute the profit which has been used for loan sanctioning. Right? There may be cases, I'm not saying everybody will be like that, but there can be cases where a person has not provided for a lot of expenditure. There's a labor settlement which has happened in the subsequent year, but he has not provided for that in that particular financial year. If he provides for it, it may result in a loss, and if there is a loss, you may not have sufficient profits to make this application for loan, right? So read through those, look at whether they have collected the latest IT returns, CIBIL, the scores which his credit worthiness based on other borrowings with other banks and things like that. And reporting is again factually done. Normally the branch has generally complied with the procedures, instructions of controlling authorities, and in case there are any observations, you please refer to an annexure, because there is not much place in the format for you to write a comment. Give your observations in an annexure. Then the question is on in the case of advance, in the cases examined by you, have you come across instances of credit facilities having been sanctioned beyond the delegated authority or limit fixed by the branch? Normally, again, this is something that does not happen. People work within their limits, but in case there are cases like this that come to your attention, please list them out first. So the first part is whether you have seen any case which is above the limit. Second part of this question is whether, if there are such cases, these have been promptly reported to higher authorities. See, I have given a loan, but I have not reported, for the whole month to my controlling authority. Delays in such reporting is also to be viewed very seriously, and if there are such cases, please list them out in the annexure. So there are two parts to it. Please understand, one is whether there are cases where it has been exceeded, the limits have been exceeded, and if they have exceeded, whether it has been promptly reported to the controlling authorities. Yeah. Again, the next Next question is on, in cases examined by you, have you come across instances where advances have been disbursed without complying to the terms and conditions of the sanction? So this is a case where they have given out money, but they have not complied with whatever is the terms of sanction. So things like collection of original title deeds, whether charges have been created, collaterals have been collected, if they had to receive guarantees from other people, whether those have been done. So primarily you have to look at the dates of all this. What is the date of sanction? What is the date of disbursement? How will you look at the date of disbursement? Take the borrower's account in the bank. When has the money come into the bank account? So that date will be there, and see whether all your documentation has been done prior to. Certain cases they also allow you to do certain items post disbursement, but here this is a specific question on whether documentation has been completed prior to the disbursement of loan. Look at it, make a list of all these items which have been there in the sanction letter, and if there are delays, you need to report these. Next question on in the cases examined by you, have you come across instances of credit facility released by the branch without executing all the necessary documents? And if so, give deviations. The difference between the earlier two is, one is whether all the documents have been collected, second is whether it has been executed. Loan, normally what happens in many of the banks is the loan agreements are not signed by the bank itself. Have you seen that in many cases? Normally only the borrower signs. Now nobody from the bank side has signed. So if there are such things, I think you should make a reference that the bank has not. So the document has not been properly executed. Now, and whether all these documents are in the possession of the branch, custody of the branch also you need to look at. In case there are movement of documents, if they have sent it somewhere else to storage or something like that, see whether there are evidences of that, and if so, make a note of that. Next question on documentation is, have you come across instances of deficiencies in documentation? Non-registration of charges, non-obtaining of guarantees, etc. If so, we need to give details. Again, what are the deficiencies? You could have charges which have not been registered. How many cases where you are the bank auditor of a bank have you seen this? That many a times they have taken loans, but the charge they have not registered. So if the charge is not registered, the bank is not protected when in case it has to do a recovery or things like that, right? So again, verify the documentation and see whether this has been done or not. Documents are sometimes executed on a stamp paper, and nowadays it is all electronic stamp paper, right? So please look at the parties' names, whether the parties' names are properly given, whether the stamp paper value is appropriate as per the Stamp Act. Yeah? And then certain cases you may have time barred document. Can you give me any instance of time barred document? Have you heard of this PDC that people collect? Certain cases they collect a security check. Now if that security check has been dated by any chance, normally it is an undated security check, right? So whenever the person doesn't pay his money, the bank puts the date and submits that check, and if it bounces, then it proceeds against collecting that money. But if that check is dated by any chance, what happens? What's the validity of a check? 3 months, right? So that document itself is time bar. You can't do anything with that document. Again, reporting in all these cases is factual. Verify the documents, report appropriately. Advances against liens, whether these have been properly granted by marking a lien on the deposit in accordance with the guidelines of controlling authorities. Now when I have a deposit, I can go give that deposit as a security and take money against that, right? Now this may be deposits of the bank itself, or it may be deposits of other banks. I may have a deposit with HDFC Bank, but I want to borrow from SBI. In such cases, you will have to actually have the physical deposit slip, because who can collect the money? Anybody who has that FDR can go to the bank, surrender that and collect cash, right? So if it is of another bank, you will have to physically see the original deposit receipt. But if it is of your own bank, normally what happens is they mark a lien in the system itself. So you have to open the FD account and see whether lien has been created. It's a tag that has been ticked, whether the lien has been marked, so that this person cannot come with his FDR and collect the money. Before he collects the money, he has to close the loan that he has taken against that. And reporting is factual. In case there are mature deposits, deposits which mature during the period that it is lying as security, either it has to get renewed, but otherwise if it is not being renewed, it has to be credited. The proceeds have to be credited against the advances. And then the balance amount becomes an unsecured loan that has been given. Next, we are on the review, monitoring and supervision part. Okay, so here the loan has already been given. You are now trying to see whether the borrower is performing, the account is active and operated properly. So the first question here is the procedure laid down by the controlling authorities of the bank for periodic review of advances, including periodic balance confirmation, acknowledgement of debt, followed by the branch. Provide analysis of the accounts overdue for review or renewal. Simple. Look at the procedures that have been defined, date and month when the advance was due for renewal, and whether it has been actually done. Okay, normally CC limits, borrowing working capital limits have to be renewed every year. So now by the 9th month they start the documentation and then the renewal happens. But if there are cases where he is operating a CC limit without renewal, please list those out. And cases they have prescribed a format of up to 6 months, 6 months to 1 year and above 1 year. Are the stock, book debt statements and other periodic operational data and financial statements received regularly from borrowers, and whether it is duly scrutinized? Is suitable action taken on the basis of such scrutiny in appropriate cases? How many of you have certified stock statements for for your clients who borrowed from banks? Is there something that you all issue? A monthly stock statement or a monthly debtor statement? See, again here, what you have to do is, in the sanction term, they would have said what is the appropriate security. They may say inventory which is not moving above 3 months cannot be considered. Debtors more than 90 days may not be considered. So what you need to do is first see whether the data that is being submitted has been categorized like that. How can you be sure that the data is properly given to the bank? Why is this important? Because the drawing part, the DP, they call it the DP, is calculated based on the security that is available, the current assets that are available, right? So you need to ensure that whether these statements have come properly, and also correlate this to the business of the borrower by also seeing whether it matches with probably his year-end statement. See, you can't say that I'm doing a turnover of 10 crore rupees, but I have a stock of say 15 crore rupees. Does it make sense? It doesn't make sense. So merely looking at that is not enough. Try and correlate it to the business that he has or the turnover that is there in his current account. Are there sufficient debits and credits to justify so much of stock? So please apply your common sense also when you look at the statement. Don't merely go ticking, yes, stock is there, therefore DP has been calculated properly. And why is this important? Because it may also result in an account being classified as a non-performing account. If it is continuously overdrawn for more than how many days? 90 days over the drawing power, you may want to look at whether that account may have to get reclassified also, right? So therefore, this number is quite important. Look for how the DP has been calculated and what is the evidence based on which it has been calculated. One more thing is, analyze whether there are significant differences between the March month statement that he has given and the audited financial statements that he submits. If there is a large variance, then you will have to be careful about that borrower. Again, review the qualification comments of auditors of the borrower, and in case of consortium lending, DP is normally calculated by the lead bank and then given to all the others. monitoring and supervision. Next question, whether there exists a system of obtaining reports on stock audits periodically. If so, whether the branch has complied with such system. So normally what happens, as part of sanction, it may say that annually or whatever frequency you need to submit stock audit reports to the bank. The stock auditor is appointed by whom? How many of you have done stock audits? It's done by the bank, but the charges are debited to the borrower, right? So you appoint a person, collect that report and then see whether it is as per the sanction terms and whether there are any major deviations that you need to be careful about. Advances to non-corporate entities beyond 10 lakhs, whether the branch has not obtained the accounts of borrowers duly audited under the RBI guidelines with regard to compulsory audit under any other statute. So in case there are non-corporate borrowers who are not getting audited, you have to collect an audited statement for your financial statements. Because what is the tax audit limit? 1 crore this year? 2 crores? The limit has been enhanced. So if there is a borrower more than 10 lakhs but who does not have to be audited under any other statute, still you will have to collect. If he has borrowed from your bank of more than 10 lakhs, he may have to have financials audited and submitted. Then has the inspection or physical verification of security charged to the bank being carried out by the branch as per procedures laid down by the controlling authorities? See, here again the purpose is to verify whether the security which has been given has been physically verified. We have had cases where we have seen housing loans, multiple housing loans being given for the same house. Right? Many a times what happens is the numbering or street numbering and all is not very good. So only that gully number or whatever will be there. The moment you go there, the picture that you see in the file, they have a photo that they attach. One loan is from this side, the other loan, the photo is from this side. All that is possible. Right? So you have to always see what is the evidence. How are you sure that they have actually gone physically verified and how it has been documented. In respect of advances examined by you, have you come across cases of deficiencies in the value of securities and inspection thereof or any other adverse features such as frequent unauthorized overdrawings beyond limits, and whether there is adequate insurance coverage? See, securities which are subject to price volatility, like say gold or shares or commodities, if there are, you should always ensure that, see, banks normally take adequate precaution. They always say that your drawing power, if your value of gold is X, only 75% of that we will give you, or 60%. Depending on the bank, they have their own internal guidelines, but that is to cover volatility. In case the price falls below a certain amount, whether you are still secured enough, right? So you need to see whether these values of security has been properly ascertained and whether there is adequate insurance. In insurance, whenever banks take, once somebody has a borrowing, the insurable interest in those assets are with the bank, right? So even in the insurance policy, the bank's name comes. So if that is not there, please make a note. And so I'll mention that in the LFAR, because otherwise what will happen is, in case of a loss, the promoter gets the money and he can withdraw the money, but the bank will not get any money. And if there are overdrawings, if there are frequent unauthorized overdrawings, that also you need to verify and report. Has the branch identified and classified advances into standard, substandard, doubtful, loss assets in line with the norms prescribed by RBI? This is normally done through the CVS system itself. It automatically categorizes. But during your review, based on the corrections that you have wanted, adequacy of security, adequacy of drawing power, all that, based on which, in case you find there are certain of the assets which are required to be classified, you can report. You can draw, you can say cases where we have seen deviations are reported in annexure. Again, this is also where you disagree with the branch on classification. He has called it D1, but you think it should be D2 or D3 or a loss case. You need to verify the evidence, document it for your working papers, and then you can report with also your MOC, because the moment there is reclassification, there is an impact on the amount of provision required, so you can report with that also. in case of wherever there are legal actions which have been approved, whether we have done that. So you can see whether there are reports. Normally what happens is legal cases and all are handled by specialized branches nowadays. Asset recovery branches are the ones that handle it. Normal bank branches you would not see. But in case there is anything, please try and see whether you have a legal report, a latest report from the legal team which is handling it, and in case you want to make an additional provision or anything like that, that can be done. Have all non-performing advances been promptly reported to the relevant controlling authority of the bank? And also, if there is any rehabilitation program in respect of such advances, what is the status of such programs? Here, you will have to go through the file, see what has been sanctioned, and see, basically it is an adherence to what has been agreed with the borrower. Sometimes loans are restructured, but there are certain conditions which have to be fulfilled. Whether all those conditions are being fulfilled by the borrower to continue the classification of that loan. Have appropriate claims for DICGC and export credit guarantees if they are there. Normally for this there is an annexure which is prescribed to the LFAR. This is something which has to be reported. The format again of reporting is given by the bank itself. You just need to ensure that you verify it factually and report. In respect of non-performing assets, has the branch obtained valuation reports from approved valuers for the assets charged to the bank once in 3 years, and unless the circumstances warrant a shorter duration. So normally for long borrowers who've been giving business to the bank for a long period of time, please see that there is a valuation report by an independent chartered engineer, which is not more than 3 years old. But in case there is any reclassification of loan or anything like that which has been done, whether a later valuation statement has been collected. In cases examined by you, has the branch complied with recovery policy prescribed by the controlling authorities of the branch respect to compromise settlement? This again I told you, it is depending on the agreement or the settlement that has been arrived at between the branch and between the bank and the borrower. You have to verify whether all the terms of that settlement have been done. Normally, not many cases, but please ensure that you go through the terms, the conditions that the borrower has to satisfy in terms of performance of the account, and then report. And in case there are waivers or write-offs more than 50 lakhs, those have to be reported. Leasing activities and credit card, again these are specialized business which is not handled by every branch. We are not covering that. Guarantees and letters of credit. This is now the hot Nirav Modi thing. Okay, for everything else that you have audited in terms of advances, money has actually gone out from the bank. So there is a way to verify it with outflows from the bank. Whereas these are certain things which are non-fund based limits, which there is no actual cash outflow, and there is a contingent asset and a contingent liability which is there. What is the contingent asset? If the LC or the bank guarantee is devolving, that is, okay, what is a letter of credit, what is a bank guarantee? Simple illustration quickly is, a borrower, I am the borrower, I am importing some item from my foreign supplier. The supplier does not know me, he says please give me a letter of credit. So the bank, my bank says that I know Georgy, he is credit worthy, and I can give you a guarantee of the amount that you are supplying to him. In case Georgy defaults, the bank will pay. Simple terms. Okay. So for the guarantee that I give, which is a contingent guarantee, that is I have to pay only if, the bank has to pay only if I default in my payment, right? So that is the contingent liability that the bank has. And what is the contingent asset? If this liability were to crystallize, I can recover the money, the bank can recover the money from me. Okay, so this is something which is, there is a contingent asset and also a contingent liability. So here, what you have to do is, whenever a guarantee is invoked, but if it is not adjusted into the account, what a guarantee which is invoked is as though the money has actually flown out of the bank, right? So that has to be debited to the account of the borrower. If they have not done that, and if it is lying in a suspense account or anything like that, you may not be able to identify the account as an NPA because the limit, it may still be within limit. The moment you add the LC amount which has got devolved, it will go above limit, right? So you have to verify whether guarantees are invoked but not adjusted, guarantees invoked but not paid, and what are the details of outstanding amount of credit and co-op acceptances funded by the branch at the end of the year may be obtained from the management and reported in the following format. There is a format that has been prescribed. Okay, please be sure to look at and inquire from the branch manager whether he is aware of all the cases where LCs have been devolved. Look for documentation and certify this. So that covers the entire advance bit. Okay, that was the bulk of the area that you had to cover. The rest of the part, like I told you, this material has been made in a manner which is very simple for you to understand, and you can go through it, look at what is the evidence that you need to look for, and also report in the format that has been prescribed. So stationery and stamps, stationery is controlled stationery like your demand draft forms and things like that. Whether you are physically verified, whether there is a system of physical verification, whether it is reconciled to book stock. Stationery also, they have a stamp balance or a franking machine balance, whether the balance as per the machine or that register and the ledger balance are reconciled. Other assets, suspense and sundry assets. This is again something I told you earlier, that you as an auditor watch out for debit balances. If there are debit balances which are there, long outstanding, unresponded, for which they don't have details, you should propose. If they don't have sufficient details to justify why it has to continue as a debit, it has to be expensed. Now deposits, I think these are cases where people have placed money with the bank, right? So I think these are things that we can skip. Other liabilities, bills payable, sundry debtors, sundry deposits, these are what you would do in any other audit. It is basically a ledger scrutiny that is of these accounts that you would do. And if there are old outstandings based on your aging analysis, please report them. Yeah. Contingent liabilities, list of major items of contingent liabilities other than constituents liabilities like guarantees, letters of credits, acceptances and endorsements not acknowledged by the branch. Again, inquiry with the management, ask them according to you, are there any other liabilities that need to be provided for? Claims against the branch with status thereof. List of contingent liability to be verified and compared with last year's list. Compare and see whether there are any movements in contingent liabilities from previous year to current year, and look for answers, analyze the reasons. Now ETDS is another area where there can be those defects which are there. Those are actually contingent liabilities for the branch. So if the branch is handling its own ETDS process, please ensure if there are defects which are there, those are quantified as contingent liabilities. In case there were old service tax demands, those are contingent liabilities. Do a scrutiny of the legal expenses account. If there are payments to advocates and things like that, right? Go through that and try and see what is the corresponding matter for which the lawyer was engaged, and try and see whether there is any other contingent liability which is required. In case any provisioning is required, again propose it through your MOC. Profit and loss account, primarily it is something to ensure whether accrual has been done properly, cut-off procedures have been properly followed. You can look at concurrent audit, internal inspection, RBI inspection reports for any weakness. You need to test check and see whether the income is being recognized properly. They will tell you that it is being done, but you know that product method, right? What is the balance in the account? Into number of days, you do an Excel sheet and just retest and see whether, yes, normally it should be accurate, but whether it is actually happening like that or not. If there are variances in interest computation on your test check, even if it is a small amount, please don't go by materiality, because you have checked only one account, you have seen the difference. If the same error applies to all their accounts, it may have an impact, and therefore, if there are any such issues, please do report them. Compliance with income recognition norms, we've already seen the IRAC circular and whether income has been recognized according to that. System of estimating and providing interest accrued on overdue matured term deposits. You can see whether it is through the system or it is done through a manual process. If it is done, test check, see whether it is done properly and be done with it. Please do a variance analysis, a ratio analysis, and try and correlate it to the business of the branch. Just because a branch had X amount of interest this year does not mean next year also it will have X or X plus interest. If the deposits or the loans have reduced, the interest also will correspondingly reduce, right? So try and do your ratio analysis with with a correlation to the business of the branch and come to your conclusions. Like Venu had said, when you do trends, if the trend of advances is going up, if your interest is also not going up, then you have to understand why it is so. Then there are general comments on books and records, reconciliation of control and subsidiary accounts, inter-branch accounts, audits and inspection, and frauds and miscellaneous items. What I would suggest is, in the interest of time, I will stop here, but the material is self-explanatory. Go through it and it should help you look at it. Once again, I would like to reiterate that please look at the deficiency list, those 5 pages that are there. It covers virtually everything that is there that you may normally see in a branch. Go through that prior to getting onto the audit, and that should help you go through, finish your audit without a problem. On tax audit, again, the material is self-explanatory. The primary focus is on, it is similar to any other tax audit that you may do, but look for, there are pre-printed forms that the branch will give you. Most of it is not applicable or does not apply to the branch at that level. So you can, just make sure that you confirm, read all those clauses, payments to club. Sometimes they may have a branch manager who has a club membership and they're making payments to that. So just review your expenses, debits to P&L, and see whether any of them have to be reported. Penalties, fines, if there are anything that have come, try and look at that and then report it. These are all factual, this thing. Only in terms of your ICDS, whether there are any adjustments required to be made to P&L to comply with ICDS, it again differs from bank to bank. Some of them have a whole policy of recognizing the income on guarantees and all immediately, but there will be an annexure for this in the tax audit report format. Please go through that and fill it appropriately. Verify it and you can do the reporting. Government grants also, if all banks are now giving a format for reporting government grants, most of the cases it is nil. I think that's it from my side. I think you have been a very, very patient audience. I didn't see too many heads closing off. So again I would try to reiterate that please go through the material. I have done it from a student's perspective, what I would do if I was doing a training program at office. It is very, very descriptive. It is not things at a very high level. I've gone trying to tell you what is the evidence, how you should report. Carry that with you when you go for an audit. Also take your guidance note with you. Nowadays all of that is available on soft copy and can be WhatsApp to your friends and look at it. The last week I think the ICI has come out with a guidance note on frauds. Okay, please read that also. I have not been able to cover that in this presentation. Please go through that. Please understand, one, you are the eyes and ears of the partners when you do the audit. The profession is going through a very, very tough time. We are under a lot of scrutiny. A lot of people blame the auditors when anything happens or does not happen, right? So, and you are the hands at the field when you do the audit. So please be aware of it. Know in advance, prepare in advance, and go and execute your audits. All the best, and I hope you enjoy this year's round of audits. Thank you.
on LFAR and tax audit report. I now request Secretary of SICASA, Mithun Acharya, to present CA Georgy sir with memento. Thank you, sir. There's a lunch break.